In this video, we review one of the biggest trading opportunities of the year. It came after a Trump tweet on the US-China trade war. We review how to capture and make more in this enormous trading opportunity. Hi, I'm Mike Bellafiore, co-founder of SMB Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. Click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. Well, in this video, we review the biggest trading opportunity of the year. You're also going to learn the importance of game planning, how to make a breaking news trade, how to place more risk on these very special opportunities, the two most likely patterns to capture breaking news trades, and as always, we hope the biggest reward for videos like this for you is how to think through a trade like a pro. For those who want to see winning trades, in this case, one of the biggest trades of the year, one of the biggest trading opportunities of the year to add to your trading business, check out this video. If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up the free registration page in a new window. Don't worry, you're not going to lose this video. You can also visit tradingworkshop.com to register for this free, intensive, awesome workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
Okay, so this is a SPY breaking news trade. So to start off, this day, the big picture fundamentals, I felt the day was shaping up to have very increased likelihood of a major headline hitting the tape and creating a volatile move in the market. The reason for that was because at around 8 a.m. News came in that China was going to raise import tariffs on U.S. goods, which caused the market to immediately drop 1% in the pre-market. And in addition to that, Fed Chair Powell was scheduled to talk at the Jackson Hole Symposium at 10 a.m. And during that talk, he gave no aggressive rate cut plan. He just simply said that the Fed plans to act accordingly if the global economy slows down. And then in response to that, the president tweeted almost taunting Chairman Powell because he was very dissatisfied that the Fed is not being aggressive enough. So all of these things came together and really made me very vigilant of a headline coming out that would move the market and trigger a breaking news trade. So he says, as usual, the Fed did nothing. It is incredible that they can speak without knowing or asking what I'm doing, which will be announced shortly. We have a very strong dollar and a very weak Fed. I will work brilliantly with both, and U.S. will do great. My only question is, who is our bigger enemy, Jay Powell or Chairman Xi? From a technical standpoint, we're also in a very different environment that we were in last month. To start off the month, we had a big major sell-off that was triggered from Powell meeting on July 31st and Trump's announcement that we'll be increasing Chinese tariffs. And since that sell-off, the SPY has been consolidating for the last 16 trading days in a range between 294 and 284. And so you can see on the lower time frame on a 30-minute chart of the past month, we've been battling between going above and then back below the anchored VWAP from that Trump's tariff announcement, which to me indicates that buyers are trying to regain control but struggling, and there's a lot of headline risk because any headline that comes in that's negative could easily sway to have sellers regain control. And so my plan for the breaking news trade was to watch for unexpected new news to hit the tape. I wanted to make sure that I understood the news and I understood that the news was substantial and unexpected. And I also wanted to see the tape clearly react to the news event. I didn't want to go in and trade a breaking news trade that where the market did not agree with my idea that there was a change in fundamentals as a result of the headline. And so when I saw that, or when I see that, my plan was to immediately enter 3 tiers of risk as close as possible to where the stock was prior to the breaking news, and risk off of that price. And if the price is moving too fast, then I want to be entering at a level and risking off that level. And then lastly, my plan was to add to my winner if the trade is working, just because these breaking news trades have a tendency to move extremely aggressively, and the entry that I might get could be the best entry for days or weeks. And so that's why I felt it's very important to add to the winner of this trade.
So I take it one step further, which is I would add as a periodic habit to game plan big events that are potentially going to hit the tape. And that doesn't have to just be in the overall market. We sit in a market right now where the China-US trade war breeds lots of opportunities for breaking news trades to hit the tape. That's happened several times this year. But there's also lots of other really big news events that can hit the tape on mergers, on court announcements, etc., that you also want to game for as well. There's other skirmishes that you might think about as well. Escalation between US and Iran, the UK breaking out of the Eurozone officially. So, and those are not equal in how they're going to hit the tape and what they're going to do to the marketplace. But you want to be thinking ahead as to what could come. And you want to be planning as to what you're going to do when things hit the tape. So for instance, if you are thinking about a particular breaking news trade to hit the tape for US-China trade relations, you want to think about, well, what that headline would look like, what you're going to do, long, short, and then what products that you're going to hit or get into to express that idea. It's that thinking ahead, that game planning, that really can make the difference. Because when it hits the tape, you're doing a good job here of saying, look for unexpected news to hit the tape, ensure that I understand the news. That's a lot of time that will go by for you to do step 1 and step 2. If you game plan and think through these potential scenarios as to exactly what you're going to do, exactly how much risk you're going to take. So if ABC hits the tape, I'm going to buy, sell, 1, 2, 3. I'm going to risk X amount of dollars. Having all of that formulated and ready to go, then you can, boom, be ready and strike and then observe. And it's important, even after you strike quickly, to observe, because you may be wrong. There can be false news that hits tapes. People can misinterpret news initially. But I'd add that important step to what you're doing here with breaking news trading plan.
Absolutely. Yeah, I definitely agree. And I think next time I'll be doing a better job at trying to game plan the different possible scenarios that can arise with the news event, so that I'm more prepared when the news event happens for me to interpret it and knowing exactly how to act.
Yeah, I think it's too late. I think if you haven't prepared beforehand, you're at a disadvantage to lots of other market participants who've done that work. Sorry to interrupt.
Right. No worries. So intraday fundamentals, as the breaking news hit the tape, volatility was down at $16 after opening at 18. And the SPY had an ATR of $4.20 and an average daily volume of 70 million shares, which shows that it's very liquid, and you can take a lot of size in the direction of the trade. The breaking news event was that Trump tweeted, "We don't need China," and he also ordered American companies to start looking for alternatives to China. The market and myself interpreted that as the idea of that a trade deal may not happen with China, or may be further away from happening than the market initially expected.
Okay, we gotta stop. Okay, we gotta stop what we're doing, and we've got to stop what we're doing right now, because when they write textbooks, when they write books about the very best trades of 2019, this, along with one other, which I'm thinking of, this was the biggest trade in 2019. All right, this and one other trade, those were the two biggest trades, hands down, by far, in 2019 that we've seen all year long. This breaking news trade, I would argue, was one of the one or two best trading opportunities of the year. So this is not just a breaking news trade. This is a huge opportunity that hit the tape. Okay, this was a huge moving tweet that hit the tape. If you would, can you read the whole tweet?
Yep. So Trump says, "Our country has lost, stupidly, trillions of dollars with China over many years. They have stolen our intellectual property at a rate of hundreds of billions of dollars a year, and they want to continue. I won't let that happen. We don't need China, and frankly, would be far better off without them. The vast amounts of money made and stolen by China from the United States year after year for decades will and must stop. Our great American companies are hereby ordered to immediately start looking for an alternative to China, including bringing your companies home and making your products in the USA. I will be responding to China tariffs this afternoon. This is a great opportunity for the United States," he goes on to say.
All right, so, tremendous opportunity. And I said in my own tweet that, having been on a trading desk for coming on 20 years now, I've never seen traders be so critical of a sitting president after an action like this than this. And I think some people thought I was complaining, or our guys were complaining. I wasn't saying that. It was a huge opportunity. But look, and this is not a political statement, there's a lot that's going on here. The first thing is, and I'll leave the not political statement for the end, because people seem to get upset when you dip anywhere near politics, which I'm really not doing. But the first thing is, essentially, this tweet is signaling to the market that there is a much smaller chance that the US and China are going to reach an agreement on a trade deal. That there's a much greater chance that there's going to be an escalation in the trade war between US and China. The market would like for this to be over. An escalation in the trade war between the US and China, based on our observation, has caused the market to go down, and in the short term. This was as bad as we've seen in terms of escalation to date. It is signaling a lack of interest in even needing to come to a deal, which the market has expressed and priced a disagreement with. So there's that. And then I'll make the second point, and I don't mean this to be a political statement, I mean this to be an observation. A statement like this from the President of the United States is irresponsible. It's volatile, it's poorly thought out, it's not the way that people who run any sort of business behave. That causes the market to get jittery, that causes volatility to rise. So again, I'm making that point about the way the market reacts when certain things hit the tape. And so, this is one for the ages. This is one we're going to be talking about in 10, 20 years. This is one of those things that when you walk away at the end of the day, you sit there and you say, wow, I just lived and traded through history. I traded through history. People are going to be talking about this decades from now. I was on a desk and I saw the opportunity and was able to participate in that amazing, amazing breaking news opportunity. So one of the things that we've been talking to our guys about on the desk is that, and you should be thinking about this as well, is that not all breaking trades are created equal. Not all trading opportunities are created equal. There needs to be a separate bucket of risk for something that hits the tape like this. And look, maybe you were on the desk and you didn't view it as negative as I'm portraying it to be, and that's fine. Let's just go along with my assumption that something, as a teaching exercise, that something's hitting the tape that's just so different and is so moving that we need to be thinking about additive risk on plays like this. And so we've been talking to our guys, and there are great independent hedge fund, institutional prop traders who are not going to treat this as a standard breaking news trade. They're not going to treat this as an A+ trade. So we often think about A+ trades get 30 to 50% of intraday risk or trade risk overall, and let's figure out sizing based on our stop and our risk overall and go from there. This has to sit in a completely different bucket. This, for your trading, you have to work on elevated risk levels. This is a different bucket, and so you need to, and our guys need to, be sitting with our risk manager and figure out, well, what's the risk plan going to be when something like this hits the tape? What is our risk plan going to be when something like QCOM hit the tape earlier this year? That is a max buying power, max risk, defined by you and your risk manager moment where we don't leave anything behind. These are the 1 or 2 moments a year that you're just putting on risk and doing the best to trade out of that. And so there needs to be, and it's separate and distinct and pre-thought and pre-planned, and we're going for it.
Here's my trade management. As you can see at around 10:59, right when the news hits, there's massive sell volume that breaks yesterday's close price. And so when I saw that massive sell volume that broke my yesterday's close price level, I entered 3 tiers of risk, and I'll show you on the tape exactly what that looks like here on the next slide. So this is just seconds prior to the news hitting the tape. As you can see here, news has hit the tape now, and the massive sell orders hit the bids immediately, causing price to drop over 50 cents in a matter of seconds. And so here's where I see price try to get back above yesterday's close price of 292.36 and fail. And so this is my confirmation moment to enter and risk off of the 292.36 level. And I enter on a micro pullback right about here at 292.20. And after my entry, the price quickly moves off and continues its aggressive sell-off.
All right, great job capturing that moment. Love how you went back and looked at that tape as well. Great best practice to add to your daily routine.
So just seconds later, price reached VWAP, and so here's an opportunity where I think this was my spot to add, and I wasn't quick enough to add in this moment. But you can see here, VWAP is at 0.43, and on the first reaction, we break through VWAP immediately, and we try to test it a couple times, literally in a matter of seconds, and it rejects each time. And so that was a clean spot where I could have added and risked off of VWAP in the position, and I think next time I'll be more prepared and attentive to be looking for that.
Good. And look, I think when you're starting with these breaking news trades, overall, you want to be thinking about a market ETF to trade. SPY is the easiest one to start with. You want to be thinking about a volatility product, something like a UVXY or a VXX. And you want to be thinking about something related specifically to China. Maybe you want to hit a retail ETF, maybe you want to hit something like BABA. You got to be thinking about that before this news hits the tape. You don't want to be sitting there saying, what should I do? What are the best things to trade? As you're thinking that, you're losing an opportunity to add on risk. So those are things that the best elite breaking news traders have done prior, and then they're just executing.
So as far as my trade management after I took the position, I saw that the price was able to actually get below and hold below the anchored VWAP from that August 1st Trump tariff announcement. This should have been my confirmation that this was a trade to hold, but unfortunately in the moment I did not treat it that way, and I exited relatively quickly when I saw that buyers stepped in below 287 and then reclaimed 287. And so that was it. I was out of the trade after the reclaim of 287. If I think had prepared better for this scenario and seen that if the reaction gets below the anchored VWAP, then this is really a trade to hold for a bigger move, especially given the change in fundamentals. Then I think my plan would have altered in the moment to use a core of my position, 50% of my position, and hold at least till the end of the day, or for this downtrend to break.
Yeah, and if you game plan this, just to continue on this theme, if you game planned something like this or this, then you would quickly say, all right, there's two trades. One, hitting it right away when it hits the tape, putting on a lot of risk. Two, buying a lower high, shorting some more of a lower high. Here are the products that I'm actually going to use. Here's how I'm going to get out of those positions. Game planning, what would get you to take off risk, would have put you in a better position to trade this more effectively. And again, it's not that you're going to be a robot when something like this does hit the tape, but it's giving you a lot less to think about. And it's helping you get into the observation mode, giving you a lot less to think about so that you can trade better. This is one of those moments. You can't leave money on the table for a moment like this. Right. There are certain moments when lots of times we trade and it's hard. Lots of times we put on good trades and they don't work out. But if we sit at our seats, and I wrote about this in One Good Trade, if we sit at our seats, there are going to be those moments when you're getting paid just to be sitting in your seat. Everybody knows what to do. And there's going to be so much to hit the market to sell that anything you hit is going to work. And it doesn't matter that everybody's doing the same thing. Yeah, everybody's doing the same thing, and they're going to be doing it for multiple hours, if not days. And so you want to take that free money. I mean, this is the time when you're sitting at your desk where the market is giving you that free money. It's making up for the hard trades and all the hard work you're doing where you're doing the right things and not getting paid. And it's more than making up for that. It's more than making up for that. So I'd after a trade like this, want to make sure that going forward, I took out every penny that I could from these moments where the market's just paying you. Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comment section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.